Hi, this is James Ng with Full Capital, and I wanted to introduce Mark.allen on this deal called Haltom Oaks. So, Mark, thanks for jumping in here. And maybe to get started, give people a little bit of your background, and then we'll jump into this deal.
Sounds good. Yeah, thanks, James. Appreciate you having me. So I'm Mark.allen with Greystone and have been in brokerage for about 5 years. Prior to that, I was with a software company, and before that, I was in the military after graduating from West Point. But my focus here is Dallas-Fort Worth, specifically workforce housing. So more so 60s to 80s vintage suburban garden style product. And our team of 12 brokers right now covers DFW, kind of 50 units and under. Then we have more of a workforce team, which would be above 50 units, secondary markets team as well. And then we're trying to build out a little bit more in the institutional space as well, but that's going to take some time.
All right, perfect. So we'll jump into this deal. So Haltom Oaks, 68 units, Haltom City. Maybe start off with maybe the location and sort of where this deal sits, and then we'll get into more of the details.
Yeah, so Haltom Oaks is situated in Haltom City. And for those who don't know Haltom City, it's just northeast of Fort Worth. As you can see here on the map, it's just a several minute drive from downtown Fort Worth. And this property in particular is right off Broadway Avenue, and it's situated across from the police station and City Hall. And, it's really surrounded by single family homes, not a lot of competing multifamily product in the area within a 1 mile radius. But you can see just to the north and northwest, you have the industrial parks with a couple of large manufacturers and distribution companies as well. It's pretty well situated within DFW. It's you got easy access to I-20, I-35, and I-30 as well, just to the south, which you can't see in this picture here of the map. But you have a lot of your major retailers, from your food chain stores like McDonald's and Walgreens just down the road. And then, if you go a little bit farther east, you actually have the Northeast Mall. There's a ton of retail and shopping over there. So all in all, just really good suburban location.
What would you say in terms of tenant base, when you've been out there touring the property, are the most of the tenants going downtown to Fort Worth? Are they going up to the north for some of this industrial park? Where are you seeing most of the tenants work at this property?
I think pretty much everywhere you can see on the map. I don't think they're going to commute to Fort Worth. So there's quite a few that work at the industrial park just to the northwest. You have some in construction and some that work at the local retailers and restaurants as well.
Okay. All right. Perfect. All right. So so this is a 1980s property. We pulled up some interior pictures here. Talk about what the seller has done sort of on the interior of the property, and then we'll get into some more details on the property as well.
Yeah, so we were involved in the sale in 2018 in the previous ownership. There was a definite pride of ownership. They own the asset for over 25 years. And, today still, there's really virtually no deferred maintenance at the property. They've put a lot of money, the previous owner did, during their ownership, and this owner has continued to improve on that. But what they haven't done, which we're seeing in the area, is just a higher level of interior upgrade at areas such as Spring Lake community, granite countertops, stainless steel appliances, backsplash, upgraded vanities, upgraded plumbing fixtures and light fixtures. So right now the property is still 100% occupied, and it's 100% classic interiors. You can see the two pictures up there. I mean, I would deem them classic. They did replace some of the vinyl plank flooring in several of the units, and then paint the cabinets white. But it's really not much of a difference from the other units in the community. So.
Okay, so you're thinking maybe nicer countertops, maybe updated appliances, and then maybe even some cabinet fronts and fixtures would get it to that next level. And that might be, 4,000 to 5,000 a door for interior upgrades.
Yeah, right. And
Okay.
then there's no laundry lease right now, so that gives you a prime opportunity to go ahead and add some washer dryer connections. If you look at some of the competing properties in the area, they have washer dryer connections, and I think that tends to attract a little higher quality resident base. So I think there's definite upside there. And then of course, kind of the low hanging fruit would be, your reserve parking, both covered and uncovered. And there hasn't been any water conservation completed at the property. So a lot of 3.2 gallon per flush toilets. So I think there's pretty big opportunity there. Save Water Co. Did an analysis, and I think they had about a 27% savings on the water and sewer bill. So,
Okay, so we've got interior upgrades, you've got the additional covered and uncovered parking, potentially washer dryer connections, and then the water savings for sort of the value piece across this property. Let's get into, so it's a 1980s property, maybe talk about the roof and then some of the mechanical, and then how this property is run currently.
Yeah. So 1985 year of construction with 134 concrete spaces. So it's a concrete parking lot, low maintenance there, not asphalt. The roof was replaced in 2016. It's a composition shingle roof. And of course, as with most 80s vintage product, there's individual HVACs and individually metered for electric, along with individual hot water heaters in each unit. And then, Walker Holders, the property management company currently, I would note that the property manager, there's one full-time property manager, she's great. And then there's a lead maintenance tech that works part-time. I usually see this flipped where there's a part-time manager in some of the smaller properties and maybe a full-time maintenance tech. But in this case, she says that, the property is really low maintenance. And I think that's just from the care from the previous ownership and the current ownership, just kind of a low maintenance property. So that's of note.
Okay, and then on the right-hand side, we have the unit mix. So 52 ones and 16 twos. And then talk about, sort of where the rents are today versus where you think they can go.
So today market rents are $825 for the 1-1s and 2-bedroom, 1-bath, or $925. And I'm undercutting the competition. There's about $185 increase over the whole, but I'm still undercutting them by at least $50, just because they're larger communities. I think this attracts a certain resident base. It's very quiet area, quiet neighborhood, and in a kind of a more of a boutique property. So the residents don't like the hustle and bustle of some of the other properties that have larger properties across from each other and have a lot of cars coming in and out. But in turn, they don't have business centers. They don't have swimming pools and some of these things that some of these amenities that may attract some of that resident base as well. So I am undercutting the competition by at least $50.
All right, so we pulled up the rent comps here. So you got some comps to the north and then to the east of you. Maybe talk through maybe one or two of them that you think are the closest comparable. Most of these properties are 200 plus unit deals. So maybe go through on the 1-bedroom side first.
Yeah, I think the best comps, Ria Vista is a 60s vintage asset and is relatively close, but again, it's a late 60s vintage asset. So just looking at the 80s with comparable unit types would be Club at Spring Lake, Lakeview Terrace, and Spring Lake Village. They're, a mile and a half to just over 2 miles away to the north, and all in close proximity of each other. But I do think those are the better comparable properties. There's not a ton of 80s vintage product in the area. Those, along with, Acacia, you could include there, but they've got majority like micro units. They have a ton of like really small efficiencies. So it's not a very good comp in my opinion, but it is 80s product in the area.
Okay. And then what about on 2-bed side?
So 2-bedroom would be Lakeview Terrace, Spring Lake Village, although they have the extra bath. Their rents are 1250, 1275 up in that range. Undercutting at 1075 for a 2-bed, 1-bath. If you have washer dryer connections, you have an upgraded unit, I think you'll get that all day long.
Okay. All right. So I guess taking that into the financials, maybe walk through sort of where we currently are on financials versus where you think you can go on a pro forma for this deal.
Yeah. So obviously the base rental revenue has increased on our year 2 stabilization year up to 776. And that's just going to be through the, driving up to the pro forma rents through those upgrades. Other residential income, they're capturing a lot of revenue right now. I think the low hanging fruit is really just the reserve parking. So that would be the increase there. And then of course you can see on the expense side, water and sewer goes from 57,000 to that 46.5. And that's going to be through your water conservation program with a, either through yourself or through a third-party vendor. And the real estate taxes we increase based on CMI currently is the property tax consultant for the property, so they know it very well. And they're projecting a stabilized year 2 post-sale pop of about almost 169,000.
Okay. All right. Perfect. Do you have a whisper price on this deal?
Yeah, whisper is 115 a door, about 7.8 million, which I see as a really attractive basis for mid-80s vintage properties in today's market, with most deals going for 130s all the way up to 150s a door for suburban DFW.
Right. Okay. So we took a look at that based on the whisper price of 7.8. We sized it a couple different ways. One was sort of just with our standard sort of Freddie SBL loan, and that came in at about 4.3 million. So on that one, if you have maybe a little bit more equity, if you want a little bit longer term, they're going to look at the in-place rents when they size that loan. So it's a little bit lower leverage. On the second option, non-recourse bridge, you can get up to 80% loan to cost on that. So on this particular deal, it sounds like the rents are, $100, $150 lower than market. And so you can come in, do a non-recourse bridge loan, get a 3-year initial term, maybe 2 1-year extensions, and then have a 1% prepay. And then at that point decide, okay, do I take it to Freddie SBL at that time or Fannie Mae on a refinance, or do I sell the property? And then so non-recourse bridges are taken anywhere from 45 to 60 days. They're a little bit higher on you have to buy an interest rate cap. You have to, the legal costs are a little bit higher because you're negotiating a little bit more detailed loan agreement than Fannie and Freddie. And so some people, especially around the probably 5 million and under range, we're seeing a lot of people do recourse bridge loans. So if you want a little bit quicker close, maybe a 30 to 45 day close, we're seeing some people do recourse bridge loans, and those are a 5-year fixed, typically IO for 1 to 2 years, and it goes to 25-year AM, and your interest rate's probably about 4 to 4.5%. And so just depending on sort of your strategy and how long your hold period is, these 3 options are sort of what we're seeing on this particular property. So,
yeah, I would add real quick that, aside from the debt, just the property in general, like I said, 100% occupied. The current owner, he says it's, I know multifamily is a little more management intensive than other asset classes, but it's pretty hands-off autopilot property. Historically, looking at the advertising expense, previous ownership ranged from about $700 to $1,000, and always had really high occupancy as well. Today, current owner is operating around $2,000 a year for advertising expense. So, virtually nothing, and it's 100% occupied, which tells you also that they're under market rents. But just a ton of opportunity here. So I really like this deal.
And then have you guys set a call for offers date? I know this deal just recently got listed.
Yeah, we just launched last week. We're going to call for offers on August 25th. So just a couple of weeks. Would love to see everyone out on the tour.
Okay. All right. Thanks a lot, Mark, for coming on. And if you want to set up a tour, definitely reach out to Mark. His contact information is on this slide and will be in the notes below. So appreciate you coming on, Mark. Anything else about this deal that you'd like to share?
I think that's about it. Yeah, all in all, like I said, I think it's just a low maintenance, seems like a fairway deal. So could be great for a private investor, could be great for, a tick situation with a couple investors coming together or syndication. So really like the deal and hope to see some of you out there.
All right. Thanks a lot, Mark, for coming on.
Yeah.